that it is. Nobody wants to unplug and sell machines that they're already running, and the manufacturers are selling them as fast as they can make them. That said,
what's the highest price you've seen for an S9 currently?
The highest price that I've seen for an S9 is 400 euros.
What about anyone else?
I've seen up to 300 US in Venezuela. They traded at a premium there.
Yeah.
But I think as of now, they're maybe Whit has a better view on this, but I think they're in the kind of mid 100 range on average.
Yep, you're right. 150 to 180, most places.
Harry, are we allowed to say what they were selling at back in like May? Like
You're allowed to say what the market was selling,
yeah,
buying at.
I didn't know if maybe you bought any.
Certainly not. The market broadly has traded basically between the halving till now. It's been as low kind of as $15 or $20 an S9. It's spiked into the low 40s and 50s along the way. You know, and then fell again sort of during March in 2020 again back into those teens and 20s before kind of the tailwind of Bitcoin price appreciation took over the summer, and we've been kind of in a broad secular hardware uptrend since then.
Mm-hmm. And I think one of my favorite resources to go to check out the mining rig prices is something that Ethan built, which is Hashrate Index. Ethan, will you explain the reasoning behind building that, and you know what, like how you use it for your work?
Sure. Apologies for the shill, I guess, ahead of time then. But yeah, we built this mining data website, Hashrate Index, about a year ago now, and have tried to just load it up with as much useful information as possible. People like Amanda, mostly Amanda, have been giving us like little tidbits on things that we can include on it. So we've just continued to add on that. All the resources are free. So yeah, you can head over to hashrateindex.com and check out any of that data. We track like rig prices, the value of hash rate, public mining stocks. We have a full database of that. And I think, you know, that rig debt
really awesome for anyone who wants to understand mining more. I love that page. And a lot of Leo's work is on that page.
All of Leo's work. I think it's the number one highlighted, as well as some of the great work Compass has been doing, the Kazakhstan mining guide, Russian mining guide, and yeah, quite a few good research pieces there.
Yeah, that's awesome.
And a lot of Karim's work too, actually. Karim probably has like 2 or 3 pieces on that as well.
Yeah, thanks, man. And I'll also like high key vouch for Hashrate Index. I think you know, they're one of the few data providers that we like really feel does a good job covering off-chain data. And yeah, nothing but good things to say about that website. Use it all the time.
So getting back to like the state of the machines, right, and where we're at. So Leo, one of the things that you've written about is like these cycles of mining, right? And I thought that piece was really fascinating. Is it a good time to try to become a miner right now?
Yeah, I think ultimately it really depends on the individual miner's own cost basis and his or her own perception of the market in the future. So I did talk about mining cycle as if it's an objective thing for everyone, but the reality is the cycles are perceived differently for people with drastically different cost bases as well as risk preference or even strategies. So I think for miners who are hyper aware of their own cost basis, how much they're going to pay, and what how their balance sheet is going to look like in if Bitcoin price goes to 10K from here, which I personally still think 10K is a pretty high price, but and plus difficulty doubles from here. What's going to happen to his or her own financials? So I think, and I'm sure you guys get the same experience as well. In the past couple months, everybody is asking the question of, you know, should I invest in this mining operation? Should I buy mining machines? So my answer is always, you know, first of all, you have to understand what parameters you are subject to, and you have absolutely a clear understanding of what these parameters are for you, and how you stack up against the others and what happens to you when the market changes.
Yeah, that's a really good point. And I think it's fascinating because there are a lot of people that are trying to get into mining right now. But the biggest thing, and it goes back to the original question, is the Asic machine procurement, right? So we know who the players are. We have, a handful of players that make ASIC machines. But what do you guys think it will take for a new ASIC manufacturer to successfully launch and enter into the market?
Well, so I think the newest player in the market right now is Bitmain. Or I'm very curious what they are going to do for this flood season, because historically they always roll out the most exciting product, while both Bitmain as well as MicroBT are going to, they like to roll out their newest product, or at least do product announcements right before a flood season, which is around April to May. Actually, so my hometown is actually in one of those flood areas, and it actually my house actually gets flooded during those times. But sorry, I think both Bitmain, it's clear that both Bitmain and MicroBT had some pretty interesting experience in the past year. So for Bitmain, everyone knows what happened, but for MicroBT, a less known fact is that they are neck deep in some litigation, with some other competing manufacturers. So their progress is definitely halted, artificially halted. So I'm sorry?
Because Bitmain has also had litigation. So is MicroBT really halted?
So a variety of factors. One is Dr. Yang being physically, or his capacity of contributing became very limited. So Dr. Yang is the founder and really the brain of MicroBT. He was responsible for designing several of their star products. But as far as I know, in the most current iteration, he's no longer participating, or at least he's not participating in the development process full time. But
the machines are still cranking.
Yeah.
With or without, MicroBT is doing real damn good. So I don't know. I think that Bitmain has also had a lot of legal problems over the past year too, right? And a lot of it brought on by themselves. So it's kind of interesting that is the state of the top two tier, the top two manufacturers. What does everyone else think?
I think that the most important thing, the most important thing that we've seen happen over the last year is that maybe year plus, is that the warranty period got doubled from 12 months, or from 6 months to 12 months. Yep. And so that effort was led by MicroBT originally, and then Bitmain realized that they needed to match to stay competitive in the market. And so the most important thing, to me, and this speaks to the improvements that both firms have achieved in their manufacturing processes, is that they're doing a better job providing the product, whether that comes with delays or that comes with, with shipping challenges, the tariff regime, all that aside, the quality of the machine that's getting delivered today is better than the quality of the machine that was getting delivered a couple of years ago. Yes. And that's reflected in both firms offering a doubled warranty today than they were able to offer previously. So I think that's the biggest deal, and it speaks to, maybe not total maturity in the market yet, but the first sort of indication that there's maturity coming.
Yeah, doubling a warranty period is amazing.
Yeah, so I think one of the interesting outcomes that has kind of been under discussed with the Bitmain division is just that we're seeing BTC.com fall on one side and Antpool fall on the other. And I think that's just awesome for Bitcoin's decentralization. The days of Bitmain being an actual tangible threat to the network are pretty quickly drawing to a close. So I think it's awesome to kind of see more decentralization at the hardware manufacturer and pool level. I'll also add, it's really hard to be doing badly in this market. Even secondaries markets are crazy hot. And we've kind of seen a run up in S9 buying, as you guys pointed out. Our estimates put around 35% of the current network hash power is being generated by S9s. Wow. And that's up pretty significantly from the lows a few months ago.
Yeah.
That's a lot.
That's a lot.
That's crazy.
I mean, the spot.
I have a question on that. Do you think that that's from just old S9s that had been, thrown in a pile, all of a sudden getting turned back on? Or are people still buying new S9s? Is that still happening?
No, it's all Steve Barber's Christmas tree is getting plugged back in.
Yeah.
Yeah.
No, it's all existing S9s. I don't think any new S9s are rolling off the production lines anymore. So it's all S9s that were just sitting there collecting dust.
So guys, will there be any other entrance of ASIC manufacturers on the market? How many will try? How many will make it? How many will fail?
More will try, right? I mean, I think in a situation like this, the market is begging for someone else to give it a shot, right?
Mm-hmm.
I think that there's so many people who would like for nothing more than for another ASIC manufacturer just to come on and produce hardware that could be used at this stage. Will they succeed? It's all going to come down to who wants to take the risk. You know, right now, if you're looking at it, are you going to lay out the money that's necessary to, you know, take a bet or take a flyer on somebody who doesn't have proven hardware? It's hard to say, but with that comes the same question is like, if your mandate is that you need to increase your hash rate, you need to, you know, add more machines to your facility. At what point do you have to kind of throw caution to the wind and just buy whatever's available?
Yeah, that's a great point. I think it speaks like to Canon, where maybe like 3 months ago, no one wanted to touch Canon hardware, but now you're seeing people like Hive, quite a few other miners I talked to are also buying Canon. So I think it's the best time for a new manufacturer to come out because they don't have to be competitive. They just have to get hash rate online, like Whit said, and
Correct.
People will buy anything that's out there.
Yeah. If they're stable and they can come in at a reasonable price point, they'll do really well right now.
Do you think you could see any of these legacy chip manufacturers try and enter the market, like Intel or NVIDIA, any of those, AMD, would they start making their own ASICs?
I don't think that AMD will. I think Intel is poking. I think it's something that they're probably exploring. But you know, the question then comes is the market big enough? Even as Bitcoin's blowing up right now, is the market big enough for them to divert any of their chips or, you know, shift focus from where they're going currently? You know, it's like if you look at a Samsung, does it make sense for them to reallocate chips to making their own ASIC versus just continuing to scale products that they're already making and selling for, you know, large profits?
Hey, Harry.
Yeah.
As an operator, would you buy a new ASIC? Like a ton of them?
Maybe. Depends. You know, I think.
Not a good enough answer.
Yeah, okay. I mean, so let's just hold on, Whit. Let me just lay sort of where we are at today. You know, as a global macro, you know, economic viewpoint, like there are not enough chips to go around. The Ford F-150, the most profitable car coming off the factory line in America, is getting slowed and throttled back because there aren't enough chips to put in the goddamn dashboard. So like to understand sort of the backdrop of where we stand today, like there is a global shortage. This is not a Bitcoin problem. This is a foundry problem. And so we need to come at it from that angle first. And so therefore to justify a new entrant from sort of a large scale existing player, like that player needs to have significant capacity advantages to justify shifting existing floor space from a proven product line to a new product line, right? So the game theory for any of these folks is if you're going to justify reallocating away from a high degree of certainty to a low degree of certainty, you better have a really, really good reason why you're going to do that. You know, I have yet to see a compelling argument that that's going to happen, you know, from a really senior ASIC team who's experienced with these types of machines, who's ready to go. You know, I think that that's kind of a stretch. You know, stranger things have happened for sure. Like, would it shock me if that's how it shook out? You know, no. But do I think that that's sort of the most likely path forward? Also, no. I think we're kind of in this choke point position right now where we're going to see the state of play as it is today kind of continue in the short to medium term. As we get kind of out of that range, that's when we start to see something interesting, some new market entrants. But like, you got to have a strategic advantage to get factory floor space. And so I would be looking at a new entrant, and I'd look to allocate if they explain to me very clearly and credibly why they're going to get the allocation rather than not only the other Bitcoin miners, but everybody else. I'd need to understand that really clearly.
If you look at the TSMC website, they just released their 2020 annual report, and they said that they gave, like last year, they gave automobiles less capacity, which is why I think we're seeing the shortage that we're seeing now. But you're right, it does all just come back to like the capacity at the foundry level. Any last words on ASIC machines before we move on? Karim's like, yep, I have lots of thoughts.
No, just
No?
lots of loosely coupled thoughts, but yeah, I mean, it's just crazy. Like, these machines are the foundation of, like, you know, the entire global economy, and we're just seeing like a tiny ripple in Bitcoin.
What I think is always really interesting about Bitcoin mining and the ASIC machine supply chain is that, like, we always think of Bitcoin as like this digital world, but it really is like the physical part of Bitcoin that matters so much. And I think that up until this year, like, mining never really got enough attention, and no one really understood like how all of that works. So for me personally, I'm pumped that these conversations and just like the idea of like how ASICs and the whole supply chain works is something that people are thinking more about. I think it's bringing to light a really interesting part of the industry that used to not really get a lot of attention. Okay, I'm going to switch now. Texas and mining has been in a love relationship this year, has it not? We've seen so many people saying, hey, we're like building facilities in Texas. Like, Texas is the way to go because of its decentralized grid, right? With Texas also going into like the biggest cold, like, I don't even know, like, I saw like this picture that was like this man on a horse with a frozen cow underneath him. There's like some crazy like weather going on in Texas right now. My friend Jesse can't even answer his phone because he has to charge it in the car because he doesn't have like electricity in his house. His house was 40 degrees this week, right? So things are like wild in Texas. The thing that I started to think about this week was, well, if Texas is like, if everything is shutting down and the electricity prices are so high, is there a way for us to see how much hash rate actually exists in Texas? Because we would assume that they would all shut off. It's like, has there been a massive dip in hash rate since like this Texas storm has happened? So Karim and Leo, have you thought about this at all? And have you looked at it from like the data point of view or like the research point of view?
Yeah, so I mean, I thought about it when you asked me earlier this week. I think it was just like an awesome idea. What we've seen so far is just like only about 16 exahashes have gone offline in the last 10 days since the all-time high, which is, you know, a drop, but it's not like super duper significant. Like, we've seen a few comparable drops just this year, and not to mention like in the rest of the network's history. So either, you know, there's just not a ton of hash power in Texas, or they're less affected than they could be, or all of this is just noise. I would say it's just like it's a small enough drop that you can't really call it significant in any capacity.
I have a small sample size, but on the Luxor pool, we lost about half our hash rate overnight.
Wow.
So, I mean, that was probably only like 400-ish petahash that we lost, but it was, yeah, it seemed like every miner that was in Texas at the time was offline. Also, there was some problems still at the same time in Kentucky, as well as Buffalo. Mm-hmm. But yeah, definitely, I think it seemed to impact the market. I would say that a lot of the Texas build out right now seems to be future. Yeah. I think like we've probably talked to farms that contribute like 3 to 5 exahash in Texas right now. I could be off on that range, but I would say there's at least 3 exahash plugged in Texas now.
Mm-hmm.
Yeah, I think the hard thing is just like network hash rate is estimated backward from the interblock time. So there's already so much variance when you do that like kind of detecting this, unless it's in like, you know, I'm sure we would see it if there were a blackout in Sichuan, but unless it's that, it's really hard to tell.
kind of speaking to that, how long, like what's the time frame that you would have to look at the block time interval change in order to kind of back out, with, let's say, a 50% confidence interval, like what the hash rate change might be?
It depends how big the region that you're looking at is, right? So the larger the region, the more likely you are to see kind of like a statistically significant drop if that region goes offline. If we're talking in the order of like 10 exahashes, I don't know if you honestly can, because it just like could be anything else, right? It could be like Asic troubles, it could be broken S17s, it could be anything. And it's really hard to say with certainty on a one-off event like this that this is really what caused it. If the drop is something in the order where like the largest farms are creating 3 to 5 exahashes.
This is one of the situations where I actually kind of like reported hash rate. There's obviously a lot of things wrong with reported hash rate, including like a lot of double counting. But if you look at like the mining pools on basically there's websites that aggregate their APIs and aggregate their hash rate, and you'll see like a drop all at one time. And so you can start to see like little trends. I mean, you see it definitely on the Szechuan rainy season ending, but you did see a small blimp on some of the more global pools with the Texas situation.
Harry, any thoughts on Texas?
I mean, listen, I think it gets back to the heart of like how, I actually don't have a huge mining opinion on the situation in Texas and kind of what we've seen thus far. I have much more of an opinion on the structure of the grid and why Texas is an attractive region and what are sort of the nuances, to that power dynamic. So, when I look at Texas and like think about why it's exciting, it's exciting because it's actual market power. So it's a merchant environment. The ERCOT market is complex and floats kind of. And so, you get to see kind of the sort of the naked economics of power availability meeting power demand. And so that's, attractive for lots of reasons. It's nuanced and challenging for other reasons, but I think that over time, like this is a great argument. I spent some time with Marty Bent last night, and we were talking about Texas, and the context that we were talking about it in was like, this is the reason to go behind the meter. Get yourself away from sort of the full-blown grid dynamics of a market where you're buying at a floating price, and lock in a relationship where you're able to actually have a strategic advantage with the power producer or the energy generator or the resources directly. So it puts a pretty bright spotlight on one of America's large power networks and sort of shows it for all of its value and all of its challenges all at once. And again, kind of highlights that the need for differentiated strategic advantage as an operator is so critically important. And if you're not building that and growing that moat, like you're falling behind.
Any other thoughts on Texas and mining?
I've got a question kind of broader about this, which is like, clearly this whole Texas like freeze over is a black swan-esque event. Viewing it broadly from a mining perspective, kind of going off of what Harry was talking about a little bit, but like, what are you learning? Like, what's the takeaway that you have from seeing this? Does this make you bullish on Bitcoin mining? Does this make you bearish? Like, what are your thoughts? Like, how has this changed the way you think about it, if at all?
Oh, I think it's ridiculously bullish. I think it is absurd. It is absurdly bullish to show how fragile the energy markets are and how depressed the overall generation levels are nationally, if not globally, because we don't actually have a reasonable market mechanism to incentivize power density. And so because of that, we find ourselves like ridiculously underutilized across the entire country. So we're relying on government subsidy. We're relying on renewable energy credits. We're relying on, pick your tax treatment as to why you're going to convince an operator to build out net new capacity. And so when you go through a 40 to 50 year regime of underbuilding the energy infrastructure, like, of course, the first time you get a black swan, you're going to get absolutely punched in the mouth. And so that's what we're seeing today. We're seeing, tens of millions of people without power, without gas, without electricity. And it's ridiculous. It's ridiculous that we got 40 to 50 years in without letting a market drive the actual building of demand and supply of power. And so what Bitcoin gets to do is just orange pills the energy markets. And it's incredibly powerful to reintroduce a market function to these areas that have been living kind of in the Wizard of Oz land, for the last half a dozen decades. And so we're going to see very rapid development, and we're going to see power development, around these sort of opportunities where there's going to be a flexible load consumer, and that's going to be the Bitcoin miner. Like, that's the economic driver for power development in the future.
That's a brilliant take. Whit, do you have anything to add? I saw you nodding your head.
No, whenever Harry talks about energy consumption and mining, it just gets me excited.
Yeah, Harry gets us all going on that topic. It's like a normal occurrence. I mean, I think that the cool part about Texas, Harry, is how it's set up a little bit differently. So like the Bitcoin miners that are mining there, that own their own access to electricity, right, can sell that electricity back to the grid. So I think that that's a really cool thing that happens in Texas, just based on how that grid actually works. So mining is the perfect use case for a scenario when this black swan event happens, because it's like, hey, I'm going to make just as much money by turning off my machines, which doesn't really affect me that much, right? Like, you can easily turn off your whole operation, and then you just get money from selling your energy back to the grid. So it's kind of like the perfect place for Bitcoin mining, or like the perfect situation. So, I mean, I'd love to talk to someone who did that this week to get some more like feedback into like how that looks. But my overall question was like, who is actually in Texas doing this? And does like the hash rate change like reflect that there's a ton of hash rate in Texas based on like what we're reading in like all of the mainstream media? So I guess that's still to be determined.
But let me piggyback on you there, because you're exactly right. And like, this is an opportunity to really shine the spotlight on how sophisticated an operator you need to be when you start to sign these contracts and negotiate these power contracts. Because, Amanda, like what you just described only works if you structure your organization and your relationships the right way. So like you need to be thinking about these types of use cases, not just I love talking about power price, but on some level, I think it's a vanity metric. Like, I think that the flexibility within the organization and the rest of the stack that it takes to actually pull Bitcoins out of the ground is just as important sort of as that top line, number that you pay per kilowatt hour. Like, it's the rest of it all too. And, I think we get obsessed with sort of what that kilowatt or megawatt hour price is, to the detriment of deeper analysis on the rest of how the organization is structured, and the opportunity costs that you introduce, by accident, until you see a black swan hit like this, where now is the opportunity to reset sort of our educational baselining, and start to get smart again.
Love it. Last? Oh, go ahead, Brad.
Yeah, one more question from me, and I'm pointing this towards anyone, but maybe Leo, and maybe Harry as well.
Not to call you out, Leo, but maybe Leo.
Maybe Leo, yeah. Looking straight at you. So clearly, it's funny to me, like, two areas that we always talk about in Bitcoin mining is like Texas, and then the Sichuan region in China, both because like they have very I don't know if peculiar is the right word, but like they're their own kind of system in terms of energy production and like innovation. And I'm wondering if there are other regions that we're seeing that are doing innovative things in energy, where you might see future demand for miners to come there and kind of help create the incentive model to continue that innovation. Do you guys see any places like that off the top of your heads?
Russia and Iran and Kazakhstan. Yeah. Those would be the three. I mean, right now, I think we've all seen the news about Iran and the stance that they've kind of taken on Bitcoin mining. Although there was the seizure of those Bitcoin miners, there's still quite a lot of hardware that's flowing into Iran from various countries. And they've been utilizing a lot of the power that's produced in country to, the extra power to mine Bitcoin. Russia's been very forward thinking when it comes to to cryptocurrency. I know that they've had some restrictions on people within the country, the citizens of Russia, and how they're able to participate in the market. But the laws do allow a little bit more flexibility for outside investors who are going to be bringing hardware in and mining Bitcoin. And then Kazakhstan, I think, has been, we've all been talking about it for a couple of years now, right? Like Kazakhstan has been an area where people have looked to go. There's obviously readily available cheap power from the old coal-powered factories that are there from previous Soviet times. So there's a lot of opportunities in that CIS region and going down into the Middle East now. Yeah, I mean, that's what we're seeing right now. It's a lot of new interest there. And I think it's getting safer than it ever has been to mine in Kazakhstan and Russia.
How?
Well, so there's more legitimacy to it. So you have people who are taking a more Western-minded business approach to how they're operating their businesses, right? There are certain security measures in place. There's less of this idea that I'm going to send my machines there and I'm never going to get them out. Kazakhstan in particular, they've done a lot of work within the government to set certain laws in place for people who are importing and exporting the hardware itself. So like if your machines go in and they stay for less than 5 years, you're due to pay certain taxes if you want to export those machines, right? But if you keep them there for 5 years, you're further incentivized to just grow your operation within the country. And that brings a certain kind of investor who wants to build out infrastructure. And then, I don't know if everyone saw the news, but Bit River, they've partnered with an energy company in Russia, and they're continuing to expand their footprint. They're building 2 new data centers there. I believe they're going to be pushing 500 megawatts of available power over the next year or so. And it's, when it comes to how they operate, and I can say this because we have machines that our customers are operating there, they are fantastic. I mean, customer service, tech support, their ability to communicate, I mean, everything. It's
Uptime?
on par.
Uptime?
Uptime's great. Yeah. 98, 99%.
Love it. Love to hear it.
And it's hydro powered. So.
That's awesome.
Yeah.
Also, Paraguay's popping. I think like Whit has talked about that a little bit on his podcast, but it sounds like the setup there is very, very unique in terms of energy availability and just like pricing arbitrage.
It's like the second biggest hydro dam, right,
Yeah.
in the world after one in China.
Three Gorges.
Three Gorges, yeah.
Yeah.
And then, I mean, I have to talk about Canada here now, and maybe Harry can come in with his accent at the end. But I think Alberta is in a really interesting position here. So Alberta is pretty much like the Texas of Canada, and they produce a lot of oil and gas, but they can't get their product to market because British Columbia, the neighboring province to the west, blocks pipelines. Quebec blocks pipelines to the east, and now Joe Biden's going to block pipelines to the south. So Alberta is kind of stuck with all these natural resources in province, and how do you actually end up getting those to market? Well, a really interesting way to do that is not only produce your commodity in province, but also consume it and then export it digitally. I don't want to get like layer one on everyone here, but you can turn that electricity into digital export. And basically, they don't need to sell their produce through BC or Quebec or the US. They can consume it, mine Bitcoin straight in province. And I think that's going to be a really good area for Canada moving forward.
So Kazakhstan, Russia, the Texas of Canada, and Paraguay. Interesting. I like it. So shifting gears, a really interesting, I guess like new trend has been North American Bitcoin mining pools popping up. So Bitcoin Mag brand, I know that you guys just published an article recently about like the different mining pools in North America. Ethan, you were the first North American mining pool, were you not? Do we not like to put labels like first on anything?
Definitely not first. I feel like somebody probably set up a pool in their in their mom's basement and had a mining pool running at some point, I'm sure. But yeah, I guess we were one of.
I like that.
we were one of the first of like the new wave of kind of more company focused mining pools that take like a corporate approach. You know, that back when we launched mining pools in 2017, no mining pool like operator would put their face on a website. That just wasn't the case. Like it would be people with anonymous names. And so I think of the wave of like new kind of company focused pools. Yeah, we were probably like amongst that first wave. But like you said, there's quite a few new entrants into the market.
So
And I think it just speaks
tell
to,
me about some of them. Tell me like what's the state of North American mining pools?
to date, it's been very limited. So even today, about 97% of the networks with Chinese mining pools, a couple, 2 to 3% is with a European one that doesn't do business with Iranian miners. And then not a lot in North America. So it's a completely new industry. But I think it speaks to the amount of hash rate that's planning to come over here. As mining farms get built in Texas, Alberta, other places in North America, I think it's natural that more North American pools start popping up. So there's DCG Foundry that's come online. It looks like they're mining with over an exahash. Titan Pool, which I don't, to my knowledge, hasn't started mining yet, at least officially, but probably doing some testing. Same with the Blockseer pool, which is also doing testing. And then we lost a North American pool the other day, Nova Block, as they got acquired by Poolin. So that's the kind of current landscape. And I would say like just high level, I think all of them can succeed. If we like expect there to be 20 exahash plus of hash rate in North America by end of year, then there's room for all these pools to gather quite a significant amount of hash rate.
Do we expect there to be 20 exahashes of hash rate in North America by the end of next year?
End of next year?
Yeah.
Yeah.
I like it.
Hard yes. Hard yes.
Bullish. Yeah. That would be awesome. That would be really cool. So, Ethan, do you think with all of these pools popping up, right? Like obviously you've been around since 2017 with your, like you and Luxor have been around since then. Do you think that there'll be a natural consolidation of some of these pools?
I think there's room for at least like 5 to 6. I think they will be, the ones that want longevity will need to be integrated into other products. So something like DCG Foundry, for example, they have their suite of like financial products and mining, like miner financing and whatnot. So there's an integration there. Other companies in Asia, mostly like Poolin and Binance, have done this really well, integrated financial services with the mining pool. So I think for like the longevity of the pools that survive, I think they'll need to be integrated with mining services. That could be one of two ways. One, a mining service or financial services company could create a mining pool, kind of like what Binance did. Maybe that's like a Coinbase or whatnot. Or they could go the other way. A mining pool could start creating financial services, kind of like what Poolin's done with their integrations with like BlockFi, Three Arrows Capital, and some DeFi projects. So I don't think like standalone pool is going to be that attractive of a model and have that much longevity in the future.
Interesting. Bran, I think that you had a question on pools, right?
Yeah, well, I was just going to ask, I have a couple questions really, but my first question is really like from a broad sense, say I've got a miner plugged into my attic because I need a heater, right? What would I see as a difference, like plugging into a North American mining pool versus, a mining pool in China or Europe or somewhere else? Are there real, like tangible, competitive advantages to doing North American? Do I notice a difference?
Day to day, I don't think you would notice a difference as just like an individual miner. The number one thing that miners care about right now, whether individual or institutional, is like the profitability. So if that's things like lower fees or profit switching or just even optimized efficiency, or so you're not losing shares on like invalid and reject shares, that's what miners really care about. And so most of the Chinese pools like F2 Pool or Poolin, they have nodes in North America. And so your mining experience is not that different from if you use, say, Luxor or Slush Pool. It's all very similar. I think where it starts to matter is, and will matter more in the future, is at the institutional level. Eventually, I think it's going to be potentially looked at it with depending who you are, like if you're doing business with a counterparty that's not based in your jurisdiction and you have no legal recourse, and that company is literally responsible for your payouts and your revenue, that could potentially be put under the spotlight. So I guess we'll see how that plays out. I think some want this more regulated than others. I think in reality, it'll probably fall somewhere in between, you know, the Wild West we have today versus like the future that some people want for this industry.
So a follow-up question to that, and you know, I'll push the envelope a little. You know, it seems like we're referring to potentially like, you know, pools not paying out to certain groups based on, you know, restrictions that exist outside of Bitcoin itself and that infrastructure. You know, are we seeing that as a trend in the industry? Is that something that we should be monitoring? Like, could we ever see a pool come on that, you know, even censors financial transactions on chain based on, you know, just who you are and where you live? Is that something that we see as a trend, or we think that's maybe noise?
I mean, if we can see censorship in any area, we can see censorship in every area, right? I think that's the challenge with these pools is who knows? I mean, there's a big question mark, but when you have people that are jumping into it with the mindset of being compliant in some way, shape, or form, that means there's going to be a level of exclusivity. They're going to have to be screening against whatever the rules and regulations are to make sure that they are compliant. And that it's just anti the ethos of Bitcoin. It's just a slippery slope.
I'm gonna finish my glass of rum here and then answer that question. But
Chug it.
One chug. Let's go. Come on.
I think you can really break it down into two parts. One is like KYC AML participants of the pool. And unfortunately, all North American pools are just going to have to do this, similar to how exchanges do it today. Just because you can't do business with an illicit actor as a US-based entity. And so you're going to have to do those KYC checks. But I think where it goes too far, where certain people may have overstepped now, is like censoring transactions in the block itself. Maybe I'll pause there because I know Amanda's probably pretty fired up and wants to say a few words about that.
I'm feeling real good tonight on this Thursday night. I just think that censorship on transaction levels is wrong on so many levels. It like goes against like Whit just said, the ethos of Bitcoin. And then also if we think about like structurally how that works, right? When you mine a block right now, there's two things that happen. So the pool decides what transactions go in the block, and when you get a payout, you just get one payout, right? Like you don't get a difference between the Coinbase transaction or the transactions in the block, right? So it seems like I'm not really sure how that is even something that you can do. And then on top of that, like it's the question of like, why should we be doing that? And so like this one thing that came up since I've always looked at mining through like an institutional lens a while ago was the idea of like clean coin, right? Like, so can there be some type of like virgin Bitcoin that is like more special than another Bitcoin? And the reality is no. Like that messes with the fungibility. I almost swore. That messes with the fungibility of Bitcoin, right? And we need one Bitcoin should and will always equal one Bitcoin. So if we're trying to mess around with like how that works, I don't really understand like the long-term like plan of that or why there's any value in that.
I mean, does this eventually become that only these pools can be used by all North American miners or US miners, right? Institutions aside, like if it's good enough for the big guys, isn't it going to be forced on the little guys as well?
No.
You know,
So
like you can't use Binance without a VPN, right? All right, you can't use Binance. So
I agree with you. So this is, but I think this is where we're headed anyway. Like my take on mining pools is that mining pools should never generate revenue. Is that I think that mining pools, and Ethan knows this is my hot take, is that mining pools will always have either a zero or a negative fee. Mm-hmm. No mining pool will ever generate positive revenues once we reach sort of the next maybe half step of broad maturity, because those businesses, to attract hash, have to offer other services that justify the presence of the hash.
Sure.
And they'll need to bid negative to get the hash rate onto their platform for the other variety of services they provide. And so my opinion is that those other services that are going to get provided are going to be other KYC restricted services. And so there's going to be a self-selection component to the future of mining, where if you're self-selecting into pool X, Y, and Z, and that comes with feature set A, B, and C, you're already a KYC AML client across the other services that have attracted you to the platform in the first place. The same way that, like exactly like Whit said, BitMEX and Deribit and forgive me, my lack of trading knowledge betrays me, but pick your avoidant jurisdiction exchange du jour, and there's going to become this sort of parallel world around mining and block rewards and transaction fee revenue sources, and it's all fungible once you've gotten out of that layer. But similar to today, where we see this, and I don't want to say gray economy, because it's all above board just elsewhere. It's all below board if you're here in North America. You're going to see this parallelization happen, and then there's going to be seamless sort of transmissibility between those two parallel tracks for the Bitcoins themselves, and everything is going to function exactly as it does today.
Yeah, I
Except I
definitely
get
see
to keep a little more revenue because I don't have to pay fees.
I kind of agree with Harry, where the parallel track kind of situation is going to permeate. I think we're going to see that, I think we are going to see pretty wide scale attacks on Bitcoin's fungibility. I think we are going to see white market Bitcoin separated out from, gray market Bitcoin. And it's going to command a premium because, it's inside of the walled garden. But just for regular everyday Bitcoin users, I think we're going to continue to kind of be able to hold and use it how we do. We're just not going to be able to sell it as high as the regulated markets will command.
Leo, you have any thoughts here?
Yeah, so actually, Harry, before you mentioned this, I thought I was the one of the few people who thinks that mining pool should not generate revenue, and I never mentioned this to Ethan and Nick. But I think the trend is very clear that mining pool is a commodity software. It's a piece that's getting thinner and thinner in total mining stack. I mean, Ethan, you realize this as well, and I think the directions that you guys are taking your company reflects that. Regarding to your point, Ethan's point earlier about whether it's integrating with financial services or having financial services acquire mining to get in touch with miners to acquire their flow, I think either direction proved to have some trade-offs. I think the challenge for mining pool to build upward to reach into financial services is that mining pools are not that wealthy, right? So some of the newer generation mining pools, of course, other than F2 pools, these are have made money elsewhere. So the inventory of the inventory available for mining pools to spend on perhaps building on a lending business or trading business, the very limited options. You have to always go out there and raise for outside capital, but whereas for an exchange to reach down to a mining pool is much easier, right? So that's why I think the latter is much more likely to happen. Some of the mining pools become part of larger institutions, part of their stack. And as for KYC, I think it's going to be a very tricky. There's going to be so many loopholes when they start executing. I think there's going to be a period of time where what the regulators demand and what people actually do, there's going to be a difference for a period of time. So I don't think this is that black and white of an issue, at least for a foreseeable amount of time.
I don't necessarily think there's anything wrong with KYC pools. Like, knowing who you're pooling your hash rate with isn't necessarily a bad thing. I think where I start to struggle is the censorship of the transactions.
Yeah, I think this also is a business consideration as well as catering to regulatory demand. So I think the what makes mining pool different is how exactly do you structure your KYC, which at what point do you demand for information? So I think if I were a miner onboarding a new pool and I see all these requirements for photos and signatures, I think I'm naturally turned away. But if I'm interacting with pool, the model where that Harry suggested earlier, a lot of the KYC components actually happen prior to using some of the more complex financial interactions. I think I'm much more willing to do that instead of just if I point my hash rate to the specific pool, I have to send them my Con Edison utility bill. I think that's terrible. So I think where pools start to differentiate each other in this regard is going to be how thoughtful they are in this particular UX step.
And I want to be I want to be super clear, like where the sort of the requirement for this type of behavior can come in. I don't think that this can be mandated by fiat or by regulation. I think it's really challenging. I think where this kind of requirement is going to happen is going to be at the capital formation level. So at some point we're going to go ask someone for money who says, we're going to cut you a check, but you have to do this. And one of the thises is going to be, you need to participate in this list of pools where I feel comfortable with the commingling, right? So there's always going to be a place in this market. And what it might do is it might just drive up fees for non-KYC mining pools. And so those businesses are actually providing a value add service, which is not requiring KYC and paying out, the same way. I mean, quite frankly. So, so we may see that kind of bifurcation happen, but I don't think that there's going to be sort of a major government of a major mining region come in and say, you need to KYC everybody in your mining pool. I think what's going to happen is the capital partners are going to require it, and there's going to be a migration towards those sources. I think those sources largely are going to have value add services, whether that's an exchange functionality, a derivative functionality, a hedging functionality, a credit underwriting functionality. Pick your value add service where the revenue streams are going to actually be generated to the provider. That's going to all happen sort of in a white market setting. There's going to be some sort of gray or darker market setting, which is going to be a non-KYC pool, which is going to offer all of the functionality that we're getting today. Basically, the fees might be slightly higher, but there's going to be a zero barrier to entry and zero switching costs to migrate hash from somewhere else to that source and receive a payout in the way you'd expect.
I think we might be overblowing this a little bit, though. Like, I agree that some retail maybe shied away from KYC AML, and if you have 1-2 rigs, like I'll just go to like F2 pool who doesn't require it. But some of the KYC UX is really good. I know this because like Luxor just ran down. We talked to pretty much every single KYC AML third party back at like last fall, and some of the UX is really good. There's companies like Cognito where you only need to like put in your phone number, and they can do the entire check just based on your phone number. And I think that's going to continue to get pretty good. So I think like large corporations are fine doing KYC ML. They already do it when they want to interact with Gemini or Genesis or Coinbase or whoever they're liquidating through. And so I don't think that like those companies, like if you go to like, I don't know, just like name a public company, Riot Blockchain, like they're not going to care about like needing to go through a KYC. Like that's not even a consideration for them. It's not going to turn them away.
I totally agree. I think there's a significant portion of the hash that will accept this gladly.
Yeah, they're also, I mean, like KYC users are stickier than non-KYC users, which kind of brings, I think, like to the next point, which is that this is super bullish for profit switchers because they like allow you one point of entry where you can just like KYC once, and then they integrate with all of the individual KYC across different pools. And you can like check off, here's the pools, here's the list of pools that I'm comfortable working with or that my capital partners are comfortable with me working with. Switch between these.
Yeah, I mean, that's kind of what like Luxor's trying to build is like the Falcon X for Hashrate, where you don't want to interface all these different counterparties and different blockchains. We'll interface everything. And Falcon X built a really interesting business like that for liquidating Bitcoin. I mean, I don't know if any of you use Falcon X, but a lot of times when we go and get a quote from them, it's considerably higher than any of the exchanges that we can do business with as a Washington State business.
Yeah. So just to clarify for the audience, like what FalconX has built, and there's a couple others, and this is a traditional market type of operating model, is this concept of smart order routing. So, let's just say that you're interacting with traditional equities. You want to go buy a share of Apple, and Apple is listed across multiple exchanges. NASDAQ, among others. I think there's 13 or 14 of them in the US right now. You don't actually know what exchange you're buying that single share of Apple from. There's a lot of really intelligent software that sits on the back of your execution broker who goes out and gets you this idea, and it's a regulatory obligation called best execution. And that just means that they're looking across a number of different exchanges, and they're offering your purchase order across all of those executions. And they're going to provide for you the one that has the best price at an aggregated and intelligent level. So this is the same thing, but for Bitcoin. They're integrated with a number of different exchanges. There's some others who've done this as well. And the reason why this happens is it means there's going to be less slippage. So let's say you go and buy $1 billion worth of Bitcoin like Elon Musk. That's going to move deeply into the order book of available offers. What this does is it minimizes the impact of a large, sort of single market buy. Or what it also lets you do is get sort of the best price as the tip of the spear from the set of offers. So it lets you look, between Coinbase and Gemini and BlockFi and, exchanges A, B, C, D, E, F, which one of those is actually offering the best price. And it orders the different offers of the Bitcoin in sequential order. Of best price to worst price. So you're always getting the best execution the whole way through the order book depth.
One thing before we continue on with that, Whit, it's 3 a.m. your time. I think you might fall asleep if we keep you here any longer. Thank you so much for coming.
This has been a blast, guys. Thank you so much for having me.
Good night, Whit.
Take care.
Cheers, Whit.
Do it.
Now wait.
Miss you.
Already.
Whit never sleeps.
Yeah, sorry, Harry, to derail you, but Whit, I thought he was going to fall asleep.
No, I was done. It was good. That was my whole point. I think it's worthwhile to like market microstructure is not sexy, but it's really worth kind of explaining how this stuff works.
I think Leo disagrees
others.
with you.
Yeah. Leo and I are gonna have a whole separate love fest after this, because and this is so important because we're seeing this on the heels of GME and all of this Wall Street bet stuff. Market structure really, really matters and has significant financial outcomes. And it's something we don't spend time talking about. The talking heads on CNBC don't spend any time on it because they'd rather I don't know,
Bitcoin energy
else.
It's so bad.
Exactly. But it's really worthwhile getting intelligent about this stuff because it will have a financial impact on your life, and it's going to be all over the news. Vlad Tenev was at the House hearing today, and nobody asking him questions had any idea how market microstructure works, or they'd be having a lot more of an intelligent conversation with him and asking him honestly much more challenging questions. But this is all part of the financial literacy that something like Bitcoin can help bootstrap for us, because we really have a great incentive to know more about all of this because it will have a much more direct financial outcome on our lives.
So I didn't get a chance to watch that because I was working, but did he start it off with, "I'm not a cat"? Is that true?
Yes, the Roaring Kitty did start his testimony off with "I am not a cat."
Oh my God, that
and then
video gave me life last week.
Yeah, he also later on said when someone asked him why did he buy GameStop, he totally said, "I liked the stock." So it was just this watershed moment for the Wall Street Bets memes. But Harry, to your point, I wanted to actually echo what you're saying because I didn't realize up until this whole fiasco how much better just your average Bitcoin exchange is than anything that exists in the legacy financial system in terms of just being able to buy a stock. I didn't understand what T+2 was until it became so relevant. And that seems just crazy to me that even exists in the legacy system when we're sitting in Bitcoin and we just don't have to worry about that. I just wanted to add that. So, okay, I got another question, unless Amanda, you have another question.
No, go for it.
All right. So this is probably the one that you thought I was going to ask earlier. which is, you know, it's interesting how we're talking about pools as they are now. And one thing that someone said earlier made me think about, you know, whether we would ever see a nationalized mining pool where it's, you know, your civic duty to point your hash power towards, you know, the government. But also at the same time, we're seeing different pools try and like decentralize through their own, you know, DeFi-esque type model or something else. You know, I'm wondering, which direction do you guys see things going? Is it both directions? Is it neither direction? You know, are we at the final stage of what a pool looks like? Karim, jump in.
Stratum V2, man. It's gonna come. I think it's gonna be a bit of a game changer. Like so just for context, so Stratum V2, a lot of improvements, including encrypted communications, and just like general efficiency improvements around mining empty blocks. But really, like the killer feature is that it allows miners to select their own block templates instead of the pool doing it. What that means is that you can order your own transactions. You are not dependent on the mining pool ordering transactions. They can't shortchange you on fees. They can't like inadvertently censor, they can't censor transactions without really you being aware of it. I think that's a really, really big deal. So I'm just crazy excited on that end. I think it's going to have massive applications, especially on the hash rate derivatives exchange side, and just can't wait to see where the space goes from here. Because I think like right now, Bitcoin mining is just way too centralized across pools.
You know what's the irony of Stratum V, the characteristic of Stratum V2 is that it's much more useful for Ethereum than Bitcoin.
But then with Ethereum, just like kind of a quick note, the problem is that a pool is always going to be better at extracting MEV than a miner is because they can dedicate more resources to it. It's like their core job. So miners who like order their own block templates might not be as efficient at extracting fees. Whereas on Bitcoin, just because like it's a pretty straightforward like linear curve, it's easier to do.
Well, I think that we don't have to talk about this right now, but just to that specific point, I think it depends on how the mining pool pass through the revenue from MEV to the miners, how that split works. So I think there's going to be a lot of specific cases, but enough about MEV. That's a completely separate world. Sorry.
Well, do you think there will be MEV on Bitcoin with like DLCs and other like DeFi on Bitcoin?
I think it's possible, especially with more complex interactions on Lightning and DLC. I mean, of course, the DLC still has a long path to go, but the general directions of what DLC is going to take Bitcoin is in that general direction. But I think the visibility of some of the transactions that happen on DLC is very different from all those on-chain transactions on Ethereum. So there's likely going to be some degree of privacy there compared to just, right now on the MEV for Ethereum is just open field and everyone's running naked.
Super quick, give us the rundown real quick. What is a discrete log contract and what is MEV?
Yeah, so discrete log contract is so it's personally I think it's the most viable path for structuring complex interactions on Bitcoin. So this company, there are quite a few companies that are working on it, but the core idea is that you can structure these two peer-to-peer contracts, and they can settle when certain conditions are met. So everyone knows that the scripting language of Bitcoin is highly restrictive. And this is there's still tons of problem with DLC, still a lot of UX challenges, but personally, I think this is the most exciting part.
Hey Leo, discrete log contracts is made by Taj, right? Who also made the Lightning.
Yes, so Taj and what's the Korean guy's name? Puja. Sorry, but so they were the initial authors of that white paper. Taj left because he has some differences with Lightning Labs in terms of the implementations. That's a completely different story. But yeah, he's responsible for discrete log contract, or at least the initial
for Lightning Labs, the original paper. I think you're thinking of Joseph Poon.
Joseph Poon, yes. Sorry. Yeah, I don't know what he's doing now. But anyway, sorry. And MEV is short for miner extractable value, and this is proposed by Phil Diane, who is currently a PhD at Cornell. So there's already extensive conversation in the Ethereum space on this specific topic, just because a lot of, I'm sure everyone heard of DeFi, and just because a lot of the, arbitrage opportunities that exist, because there are bots that constantly searching in mempool to potentially front run certain transactions. So for instance, if a bot sees a transaction on Uniswap, and this bot is able to pay a higher gas and capture that, front run that transaction. So things like this. Yeah. So you can think of it as analogous to high frequency trading in traditional world. I personally think this field is very, very interesting because it can be potentially very disastrous to the security of Ethereum, because it encourages miners to reorg. It's called time-banded hack, but it could be the ultimate death of Ethereum. It's
Leo, you're gonna get kicked off this panel if you keep talking about Ethereum.
No, this is so good.
Dangerous.
This is such a perfect point about why base chain computationally driven smart contract languages are a huge surface area for attack, and have emergent properties that are as confusing and unforeseeable sort of as you could expect. So like this is why the argument for more base chain surface area is bad.
Yeah, I definitely agree. I think I think the biggest reason that MEV exists on Ethereum is because of its complexity, right? It has, so theoretically, MEV can still exist for Bitcoin, and all the incentives that create this thing in the first place can still exist in parallel in Bitcoin, but it's much smaller.
Yeah, I think there's also another couple of like factors here. Number one is just like the sheer propensity for like out of band payments. So MEV on ETH is not equal for all miners, because not all miners see the same transactions. I forget who mentioned this, but if I remember right, someone wrote that about 40% of transactions are not actually cleared through the mempool. So if you are an Ethereum miner who did not see a very high value arbitrage transaction, you're now incentivized to reorg the chain. Even if you would have acted honestly, if you had like seen, it totally conflates it when you combine MEV and out of band payments. But the other thing is that even in Bitcoin, we do have a decent number of transactions where the fees are not paid in native units. They're paid in like USD or just transacted off chain. So I think this is kind of like a big part of the selling point, in my opinion, for Stratum V2, where you see kind of effectively mining pools shortchanging miners by only paying them out with the on-chain fees, but really the miners should be entitled to any of the dollar-denominated fees that the mining pools received from people who like either wanted to accelerate a transaction or insulate themselves from on-chain fee volatility.
I know a lot of those like Chinese mining pools have the transaction, like a special like transaction on their website. Like, is that actually used though? Do you have any numbers on like if that's actually significant?
It's hard to say. It does seem like it's a significant thing. I'm not going to go ahead and say it's like most of transactions or anything, but that's definitely the case. Also, it's expected to kind of increase as we kind of see fee swaps take off, with fees becoming the primary way that the Bitcoin blockchain is like, secured with successive halvings. We should see miners and frequent transactors kind of entering into these longer term arrangements. So something that like kind of moves the surplus of that agreement from mining pools to miners is going to be more and more needed.
Yeah, so I can speak to this very directly. Like we actually transacted the first transaction fee derivative swap. We did it with the folks at Biduda, and we executed one, and it was very, very cool to kind of put the paper around it for the first time. Similarly though, I agree. I think like I'm pretty bullish on the derivative market around sort of all mining native commodities, of which I think fee level, hash, Bitcoin price, and energy are all sort of direct, sort of natural mining commodities that get produced as a result of this activity. I think that sort of I think there's technical fixes in the form of Stratum V2 for sure, that start to realign the incentive structure properly. But I think the other is around, rather than sort of doing like off-chain fee, direct fee transaction and inclusion, I think it's much more so around like a bullet swap on fee level. So you're able to lock in a duration and a fee level. So like the mechanics would basically be like, imagine there's on average 1 Bitcoin per block paid in fees, and you just do a contract for difference against that fee level. And so you're either long or short fees as one side of the trade, and then the other is the other. But you're able to do so sort of at the fee rate, rather than putting yourself as a counterparty directly with the obligation to include a transaction or not. So like derivative markets can help fix some of this with sort of better like revenue enhancement opportunities that incentivize, you know, miners and mining pools not to participate in that type of bilateral.
Yeah, and I mean, like anything that moves kind of that incentive away from the blockchain is good for Bitcoin. And also it should win out, right? Because cash settled derivatives scale better than physically delivered ones. So yeah, bullish.
Just like kind of off topic, but back to your question, Brad, on like, do you think pools are going to move towards more centralization, like national pools versus decentralized? Maybe I'll take the opposite view of a lot of people in the panel, that I'm not super bullish on Stratum V2. I think that there's no real incentive for the Chinese mining pools to adopt it. So I think like those types of structures will remain at slush pool for the foreseeable future. And I don't think that any of the kind of decentralized pools like Laurentia pool, for example, are going to really take off. And that's mostly just because centralized pools have a better user experience. At the end of the day, like centralized pools can do things very quickly, like validate shares, whereas like at a decentralized level, that's very like hard to do and complex. So I think like the current system of centralized pools, where like a company or an organization is governing it, I think that's going to continue into the future. There's also, I guess, a trend on nationalized pools. I think Venezuela was the first to bring it up. I don't think they have the technical chops to get it off the ground in 2021. Maybe in 2022 they do, but I think it's some time before those actually materialize. And I think they'll be fringe places like Venezuela. I don't think we'll see like a Russia national mining pool, for example.
Ethan, why do you say Venezuela and not Russia? Like
I think the
currency. Yeah,
I think like the Maduro government, I think it just has a tighter grip on the economy than Putin does. I think like they just want to get their hands into pretty much every aspect of the country now. It's funny saying that about Russia, but I think generally Russia is a little bit more privatized than Venezuela. And I think only in like rare examples like Venezuela will you even see an attempt at that. Maybe like Iran, maybe North Korea, but North Korea doesn't really have enough energy to do Bitcoin mining. That's why they stick to Monero. So I don't think anything outside of Venezuela, Iran, and maybe a few more.
Have you guys ever heard of the concept of the Maduro Diet? It fascinated me a few years ago when I was reading a lot about Venezuela and just like the currency and deflation, and it basically says that 3/4 of adults lose an average of, I think it was 43 pounds in 2 years because they had no access to food because of the deflation of the currency. So it's like really sad to think about that. Every time I think of, or his name gets brought up, it like brings me back to that like real like awful like stat. So not to make it super dark here, but I do think that Bitcoin mining is something that could potentially, I always thought it was cool that because Venezuela had access to no electricity costs, that people were like thinking about using that as a way to get money back in the day, right? Scares me a little that now the government is doing that, but I mean, it was really interesting when I think it was like a couple of years ago when we would hear that like people were getting shut down because they were pulling too much electricity off the grid because they were mining in their backyard. It's just like fascinating to see like how people think of Bitcoin in different locations.
Yeah, I've been fortunate enough to spend some time. I recommend everybody go look at the work that Alex Gladstein is doing at Human Rights Foundation. It's at Gladstein on Twitter, and he put out a video recently with Reason, and he's just like all over sort of the use case for Bitcoin, which is like, you know, and not to take us further down sort of the Bitcoin boils the oceans conversation, but like when people are like Bitcoin wastes energy, like I can't respect that point of view, because Bitcoin does so much good for so many people out there in environments that, you know, that certainly we, you know, for those of us in North America, like take for granted. Like only 13% of the world lives under stable monetary regimes in stable governments. Like that, there's such a vast majority of people out there who suffer at the hands of their currency. And for them, Bitcoin is a lifeline. It's a censorship resistant, you know, hard digital money that they have access to regardless of where they come from. And, you know, we as members of the mining community have an obligation to secure this network and to process their transactions and provide for them this stable backbone that can offer a lifeline. So I think that, you know, the mining wastes energy discussion is just totally debunked from the get-go, just based on those inputs. You know, and I'm willing to stand on that point of view all day long.
Yeah, I think we tend to abstract the human value, right? Because I think most people think of things from their own perspective. So like, as you know, a miner, I sometimes just think about like my profit margin, but you don't necessarily think about how Bitcoin is helping so many people. So that's, you know, Alex always reminds me of that every time I read one of his tweets or I listen to him talk on anything. I'm always reminded that it's like so much bigger than just like the viewpoint that we all have. It's getting like very very cosmic now, but I think it's an important thing to think about.
Let me tack on a couple like feel good stories here. So we have a partner pool in Venezuela, Dr. Miner, that works with some private individuals in Venezuela, and we have quite a few like families now that each have like one S9, and the S9 alone produces like more revenue in a day than the entire family does in a month, and they get to hold it in Bitcoin, which is a stable asset. You know, it's even appreciating, but you know, compared to like their local currency, they're doing extremely well. So if they can get their hands on an S9, which is not easy to do, right? Like $300 US for an S9, not easy for a Venezuelan family right now. But if they can get one, that can really make a large difference. And so, yeah, we work with probably like 15 like individual like private Venezuelan miners right now that are like supporting like their family off mining. So I think you know, there's a lot of good stories here to tell.
I have a friend who is in the crypto world and her family is from Venezuela. And so I always would ask her like questions like some of those like stories about like what's actually happening there, right? Because I think that we tend to like read things and we don't know like what's real or what's not, right? Because we're just like from our own world. And so I had brought her to talk to some people and it was so funny. It was like very financially focused people. And someone was like, are they investing in Bitcoin? And I'm like, guys, like this is like the point where you like have to like step out and be like, they're not investing because they don't have like access to money. That's why they're seeing this as like another form of like being able to survive, right? So it's just like fascinating to step outside of your own little, I don't know, like bubble sometimes and think about how Bitcoin affects and also can help a lot of people. That's a really cool story, Ethan. I mean, I guess getting back to mining, one question that I have for all of you is what things worry you about the future of mining? Don't all jump at once, please.
Maybe an unpopular opinion, but I do see like the current dynamics with manufacturers is kind of worrying. It seems like the larger players are getting more and more allocation at the manufacturer level, and it's making it really hard on like mid to small size miners to even get any machines. And so it seems like it's not consolidated because maybe it's like in North America, maybe it's like 50 companies, but outside of those 50 companies, it's really hard to get allocation. And you know, I think that isn't like great for the network, to be honest. But maybe there's companies like Galaxy that will buy an order and then divvy it up amongst others, so it actually spreads out that way. But I think, yeah, it definitely is starting to get more consolidated, and obviously that's like the key theme of 2021 is like the relationship with manufacturers and getting in the queue.
Yeah, minor finance is actually a really interesting thing. We haven't talked too much about it, but there's certain areas that you have to think about. It's not like I'm trying to build mining friendly products. So products that like will fit miners, and it's not just like a one size fits all. And that's actually not that easy to do with minor finance if you want to offer like terms that are like favorable to the end client. So every single client that we want to interact with, we have to do an individual assessment of all of their operations, right? We have to go through like an insane due diligence process to understand like, what is like how does all of that like look at the end? Are you able to pay me back, right? Like what are the best like lending rates that I can offer you? What's the best setup that I can offer you? Like where is the network going to be in 18 months from now, in 12 months from now, right? So it's kind of like a very fascinating, like I see mining through a few lenses. One is like being a miner myself, right? And one is like trying to offer products to miners. And knowing that like every time you offer a product, you have to individually like assess this operation is really like become like a very fascinating part of like me and my team's world. And that also requires us to know what's going on in mining, like what is competitive. It's kind of fun and also a lot of work.
my biggest fear is geopolitical.
Mm-hmm.
I think the chances that we run headlong into more of a trade war or more animosity between the US and China will really challenge the ability to grow and scale operations going forward. I think that's a local challenge, or a short to midterm challenge. I don't think it's a long-term challenge. I think we're onshoring enough capabilities to be able to reasonably push back against that risk. And I don't think it certainly hurts the long-term prospect of our business, but it would just be a really big challenge to try to work through right now. But so I think that's kind of that's the one where like it might happen for non-Bitcoin or Bitcoin company related reasons, and therefore is super hard to control.
And that would affect more than just like our world.
Oh yeah.
What about all the rest of you? What's your like thing that worries you about the future of mining?
So my biggest worry is actually connected to what you said about mining financing. So I do think that it's going to be problematic as block reward becomes smaller and smaller for Bitcoin. I know a lot of people tend to hand wave this issue. I definitely don't think Bitcoin will die just surviving on fee alone. I think the most direct consequence of that is introduce too much volatility for mining revenue. And as a result, only well-capitalized companies or institutions that have good rates for financing can handle that kind of volatility. So I think by the time that block rewards converges to zero, it's very difficult to change Bitcoin from a protocol. But if people realize, okay, there's going to be some problem, it's very difficult to change Bitcoin from protocol level. So the solution has to, or the patches has to come from exogenous or other outside parties. By outside party, I really mean like commerces or business models built on top of Bitcoin. So I think it's very, in absence of highly, with a lack of a better word, democratic financing solutions for miner, I can see that mining becomes highly concentrated in the hands of private equity type of mining institutions. The old Standard Oil model emerges. I mean, I tend to be a little practical on these issues, and I think these are, if that's what's going to happen, then it is what it is. But I do think that there are better ways to change to help miners endure that kind of fee volatility. So Harry, what you mentioned earlier about fee swap, I think that's a potential solution. I have a lot of thoughts on this particular derivative, but we can save it for another time. But yeah, so I think something like that, something in that kind of that kind of flavor are likely going to be part of the solution.
Nice.
Yeah, I also worry about the block subsidy, but kind of from a different angle. I think of it pretty much that if Bitcoin has to succeed or it will fail. This kind of like steady growth that we've kind of seen with like fees are increasing, people are paying more, prices going up. It's working for now, and it's working, and I'm generally, I will remain bullish for the foreseeable future. But like, if we don't see really, and I hate this word, but mass adoption by the time that the block subsidy by itself is not enough to encourage miners, fees won't pick up enough. I think we will, which is why I'm irresponsibly long Bitcoin and have no plans of changing that. But I think if there's one thing that worries me, it's just that, like, look, I'm sold on the merits of deflationary currency, but can we get there in a technically sound way? And I think the answer is yes, but sometimes I spend nights thinking about it. So
yeah, I just want to
say sorry, Leo, go for it.
I just want to add to that real quick. I think some people like to argue, well, first of all, I completely agree with what you said. And I mean, some people in the community like to argue that, fees going to be so high at that time, there's enough room, the profit margin to incentivize, smaller miners to participate in the fee-only mining paradigm. But the reality is, if most of the commerces are going to happen on Lightning or side chains, it's definitely going to siphon fees away from the base chain, and Bitcoin services as settlement only. So as a result, Bitcoin is likely to go into the fee pattern for Bitcoin is mostly going to be these not less frequent, but aggregated large amount of payments, and that are so I think to your point, I think it's hard to predict right now whether there is a path to that, a technically sound path to alleviate that situation. But personally, I think it's hard to solve it technically. I think we might have to rely on financing options to change that. But which I think it's also the financial markets and technology is what made Bitcoin, right? These two are inseparable, and that's also what makes Bitcoin so interesting.
All good points. Maybe I'm simple-minded in this approach, but I look back to the original days of Bitcoin, and people were willing to mine it without any reward. Bitcoin had no value back then, and there's still people that are willing to turn on their laptops, burn electricity to mine it. And so I think it's less like, will it succeed from a miner's perspective or fail? It's more of a sliding scale. So right now, the value of hash rate is around 35 cents a terahash, right? Transaction fees are about 15% of the value of mined reward. So that's like just over 5 cents in transaction fees alone. We got down to like 8 cents a terahash, a bit lower actually, earlier in 2020. And there was still over 100 exahash securing the network. So let's take an example where there's no block reward and there's only transaction fees. And if we hold price equal, I think we could still see like 80 exahash securing the network, even with zero block reward. And so even if that goes away, I think we're still fine. And honestly, by then, hopefully the price is appreciated. We don't really need transaction fees like to go up necessarily. We just need Bitcoin price to go up relative to fiat, which is how you pay for your electricity, and you pay for the parts that go into your Asic.
yeah, I just think like the we need price to go up component is really where I where I kind of think the risk is, right? Like I think if Bitcoin goes to $1 trillion, like that's great, amazing, like the network is secure forever. But then you are securing a much more valuable network. The amount of the average transaction size is going to go up a lot too. So you're still going to need additional security. I don't know, but I'm still bullish. I just think about it sometimes.
Brandon?
Okay, if I could give two takes. One is both of these are like totally optimistic and from a probably ignorance level. But you know, if I think about what Bitcoin ultimately looks like as a successful entity, it is where miners make no profit. And ultimately, you know, that probably means that mining is so decentralized that you see like every family with a Asic miner right next to their modem. And, you know, in that sense, it's like no one's really running a miner to make money. You're just supporting the network in the same way that you run a modem to have internet access. So, you know, that'd be my optimistic take on the fees ultimately supporting the network. My worry, and I know I'm totally diverting now, but so if anyone had a counter argument, you're going to save it. But my worry is actually much more, I think, easy to combat, which is really what we were talking about a second ago. I see the moral backlash beginning to form around Bitcoin in the mainstream narrative, and the confluence of like the climate change kind of group and Bitcoin just using energy just as a fact. It just seems like it's going to hit ahead. And, you know, just depending on who is in charge of different governments, the climate change narrative may be the only narrative that matters in terms of, you know, creating policy. And so I'm worried that, and maybe I'm coming at this from being, you know, a media person myself, but like I'm worried that the narrative is going to escape logic and go straight into the propaganda realm, and that we're going to lose our ability to actually educate people about what mining does and why it's important, how it's, you know, not a big scary ogre. Harry, I see your mic unmuted. Go.
Yeah, I mean, listen, send them to me. Send them to me. This is what we do, you know, 30 hours a day, 15 days a week, all the time. Is we work directly with energy generation partners. And keep in mind, these are not energy generation partners that we went and found. They've come to find us. And these energy partners are by and large using renewable sources. They need to find market-driven solutions to government problems. And they do not have a better path forward than Bitcoin and Bitcoin mining specifically. That's it. And if the government wants to spend less time thinking about the problems that are happening in ERCOT and the problems that are happening in the rolling blackouts in California, and they want to spend more time thinking about how to help people, they will stay out of the way of the market as the market bootstraps this energy grid and this regime into the future, because we don't need their help.
You don't need their help, Harry. You're right. I'm with you. Cheers to that. Yeah, I think that the block reward diminishing over time is something that, you're right, Leo. I think we all just are like, oh, we'll figure it out, like kind of when it comes. And I, you know, part of it is like, we're not going to be here, all of us, when that happens, right? It's like 100 years from now. I think it will get to a point where it's like smaller, and we'll see that happen. But like, unfortunately, like we don't all have to really think about that as much. Like, I don't know. I think it's something to think about for sure. But like the reality is like none of us will be here for when that happens, which is kind of scary. Like if I could time travel, I would definitely go forward and see like what happens right when the block reward gets reduced. I think there's a couple things that might work. And like, is it something that Bitcoin mining isn't institutional grade anymore? And it goes back, like Brandon was saying, like to like smaller players, or is it something that like institutions that use Bitcoin, like whether it's like, you know, on their balance sheet or for like their main source of business, did they mine? Are they the miners? And they don't really care about the profit. They care more about securing the network. Or does it become more ideological? I don't know.
I go none of those directions. I actually think we already won the fight. I think the fight was the no 2x. And the fact that we locked in the block size 3.5 years ago, 4 years ago, was actually the whole fee debate captured in a nutshell. And the side of the network that sits with validating nodes as the final end decider for technological upgrades was actually the battleground for the fee debate in the future. And we happen to just Trojan horse it, you know, whether by luck or by good fortune. Like the fact that we capped the block size at that point means that we won the fee fight for 100 years from now.
Yep. Love it. I was trying to think of other ways that it could work. I just like don't know the answer. But
no, but we don't need new fees, in my opinion. We needed to not run out of the fees that we already have. And the way that we run out of the fees that we already have is we increase throughput by raising the block size limit, and we won that. So so there's a hard cap now, the same way there's a hard, you know, to me it's as important as the fight for the hard cap supply of Bitcoin itself. The hard cap supply for the block limit is just as important and secured the long-term viability.
Mm-hmm.
Yeah, and I mean, I think it's fair to say that like Bitcoin does have way more hash power securing it than it actually needs to be like a reasonably secure chain. I would like to see fees go up a little bit. So right now, I was just double checking on coin metrics, you know, but fees only make up about 14% of miner revenue, and that's in a bull run. So I think, you know, unless we want fees to get, or sorry, unless we want the amount of power securing the network to get divided by about 8, we would either have to see fees pick up a little bit or just price surge. But I do think, like, you know, there is some room to kind of lose some excess hash power. That's not a huge deal.
Mm-hmm. Karim, remind me, every time we have an epoch of a halvening, the fees tend to continue to increase, correct? Like
yeah, a little. It's kind of been overrun by just like the bull run cycle fee increases.
Mm-hmm.
But yeah, so if you just look at like fees as a percentage of miner revenue, the plot looks identical to the plot of price.
Mm-hmm. Interesting. So that leaves me with, I think maybe a final question, Bran. So, and we touched on this a little bit, Leo, because I pointed to your post, right, about the bull and like the different cycles of getting into mining. So a lot of people are now starting to say like, wow, I really want to understand mining, right? Like I want to get into this, I'm starting to see the value out of it, right? I personally know that I'm getting a ridiculous amount of like people asking me to teach them mining. And, you know, Harry, Grid has been mining through both like a bear market and a bull market, right? And that has must have been really an intense, like, you know, change of pace. How do you strategically place yourself in each of these markets? And what, like, generally for all of you, what trends are you seeing now? And is it quite possibly the worst time to become a new operator in Bitcoin mining?
I mean, I'll say that like this, it doesn't get any less stressful. You know, it's a really challenging business. It's a really challenging environment. It's incredibly rewarding. I would never do anything else at this point, basically. But you know, but I think that what's so complicated is that it really does feel like we've built 3 different businesses through each cycle, and that I've rebuilt all of my mental models. And then I you know, my grandma and I used to play cards together a lot, and what she would say to me is if I shuffled the deck for too long, they were going to go back to the way they were. And it kind of feels like that, where like we've been in the industry now for long enough where I feel like we've kind of seen, it almost feels like we're seeing what we saw at the beginning again. And I think it's really challenging around making good business decisions, around procurement, around development, around growth. And, you know, we're smarter at a lot of it. And, you know, the same as before, like Bitcoin does a lot of the heavy lifting, both on sort of the public side of things, on the margins and on the revenues that we generate. And so you need to have a really clear thought process and a really clear plan, and you need to not compromise in the downside scenario. You need to not compromise in the upside scenario, and you know, maintain sort of your flexibility. Like it's an incredibly tight, incredibly challenging market, and so you need to be sort of ready to deal with with those extremes on a day-to-day basis. And the best thing you can do is build a plan that you think will help inform your future self, your 2-year forward self. And if you're not sort of building in that kind of fashion, you're going to get hit in the face and not know sort of what the playbook is when certain things happen. So a lot of it is like playing out the different iterations, the different, the getting deep in the logic mind of like the scenario analysis, and then just doing your best, and staying flexible, because when you're the most flexible, you're the most able to capture opportunity. And so that means like, business fundamentals, capitalize yourself well, have dry powder, be ready to go, be ready to make decisions quickly. Like all of that holds true. Mining, it's new because it's Bitcoin, but it's not new business concepts. Like this is running a playbook that's been around for hundreds of years. I heard Standard Oil mentioned earlier, and I think that's sort of the best history lesson for this industry is like, look at what John Rockefeller was able to build at the intersection between the railroad industry and an emerging technology, which was oil, and energy density. And so if you think of the railroad industry as energy and oil as Bitcoin, I think you get a really good comparison to start to map, the territory around you. And so, I still wake up really, really fired up and really excited, and with absolute certainty, I'm going to face something new every day.
That's awesome. Ethan, what do you think? Is it the worst possible time to get into mining?
No, I think I went through the worst possible time to get into mining. And, we invested in a co-location in Kansas City, height of 2017 bull run. And by fall 2018, we actually went bankrupt. So I think I'm one of the few miners that have actually gone through like a huge war story like that. We had to like take all the machines, and basically we were running a co-location model, ship them all to another facility. I would say that there are some, I guess, resemblance of that in the market, like paying very high rates for machines. But I think the macro stage is perfectly set for Bitcoin now, whereas in 2017, I just don't think the stage was set yet. And so although ASIC prices are high right now, you might be buying the top. I think that ultimately like Bitcoin is very much more solidified now than it was in 2017. So maybe it's a high time to invest, but you could also wait 6 months, and then who knows, maybe a new generation machine is at $140 a terahash. So I would, as soon as you have capital, start slowly deploying into it. Maybe not spend every dollar you have now, but definitely get your hands on some equipment and some hash rate.
Mm-hmm. Leo, I'm going to change the question a little bit for you for your final question. How hard is it to be a researcher in mining, since it's a very opaque space?
Yeah, so I'm actually not a full-time researcher.
You do a lot of research in mining.
Yeah.
That's
so
you're like famous for, right? Enchanted broccoli.
Yeah, well, so I think a lot of points that everyone has touched on is the physical attributes of mining, and I think a reason that teaching people, all these general rules of mining is so hard is because it's very, very case by case, and I just want to touch on the question of, is this the absolute worst time to mine right now? I think it still depends on the person, and still depends on what kind of conditions that you have. So for a person who's paying, who have, for new entrants who come into this market, who have never experienced bear market, who have never been tormented by mining every day below cost, I think for those people to jump into this without hedging, well, not necessarily hedging the sense of hedging instruments, but backup plans or thinking through scenarios, I think for these people, it's for them, it's absolutely the worst time to mine. But for people who, like Harry, Ethan, who have survived bear market, who has clear plan, who knows how to manage rewards, who knows, what happens if Bitcoin goes to 5K tomorrow. I think for people, for operators like that, is never really a bad time to go into mining. Because like Ethan said, the macro stage for Bitcoin is set. And I think another thing that improves right now is the quality of these machines are so much better than before, that the miners can be confident that, okay, maybe after 2-3 years, as long as it can survive a possible bear market scenario, these machines will be, that the option value of these machines are still great. But back to the question of being a researcher, I think a lot of my information definitely relies on rumors, connections, and talking to people who are close to someone else. I think that's just the nature of a business that's highly localized and highly affected by factors that are not visible to everyone. And to Harry's point earlier, I think a difference between this market and the oil industry in the early days is that the information efficiency of Bitcoin market is even greater than what John D. Rockefeller had experienced, because there's never has been a market that's a global buyer of local assets that happen 24/7 all the time. So I think this is definitely an advantage that Bitcoin miners have over old oil miners, but at the same time make it much more competitive. So I think what Karim does on the on-chain analysis, sorry, not on-chain analysis, but the mining data analysis are definitely very, very helpful. But I think for foreseeable amount of time is still really the background information, that the stuff that happens that are not talked about, unfortunately, are still going to be a pillar for a mining operator to understand how this world works.
Mm-hmm.
But I do think that the good news is that there are more high quality news outlets, what Hashrate is running, Compass is running, what Vera is running. I think these are really, really good information to help people understand what's going on.
Yeah, absolutely. I think it's been really interesting. So I started in mining in 2017, which wasn't also the best time, right? I have some more stories too that were quite interesting that some of you know. But I think it's really cool to see how the strategy of miners have shifted from get the next ASIC machine, to get the next ASIC, and then have the cheapest cost of power, to get the next ASIC, have the cheapest cost of power, and make sure that you're figuring out procurement of your future ASICs, right? Because that's also super important. So yeah, it's been a wild run. And Karim, your last question, we're going to turn it a little bit happier since that's you. What is the most exciting thing in mining that you are following, and why do you spend so much time in mining? Because Coinmetrics does a lot, right? This is such a cool part of the industry for me. What excites you about what you're doing at Coinmetrics that as it relates to mining?
Yeah, so I was gearing up to answer the same question that Leo answered, but no, I'm teasing. I was gonna say, I think being a researcher in mining is crazy easy because it's so opaque and because it's so under-researched. I think that's one of the things that draws me to it, is just the number of big problems that's just truly unsolved that nobody's even taken a crack at solving.
I knew you were going to say positive. See, I told you.
So I think what's exciting about it is it's just a big, under-researched thing. And I think that's really, really cool for me.
That's awesome. Bran, any last thoughts or questions?
No last thoughts. I mean, I literally sat here and just learned so much from you guys. So, greatly appreciate everyone hopping on. If I had to have a last question, all right, I got a last question. And while you're doing that, also tell us, give us the sign off, tell us where to find you, all that kind of stuff. So last question, at the end of 2021, what will the price of an S9 be? Go, Ethan, kick us off.
185.
And where can people find you, Ethan?
Yeah, you can hit me up on Twitter, Ethan_Vera. And then, check out our mining data website, hashrateindex.com. Thanks for having us on.
Thank you. Let's go to Leo.
42.
$42?
$42. I mean, we're just saying numbers, right? So.
All right. And where can people find you, Leo?
So I run a blog called Anicca Research. It's spelled Anicca, and you can also hit me up on Twitter. It's Leo Zhang.
Awesome. Thank you so much for hopping on. Let's go to Harry. You're muted.
He's like, you can't find me anywhere. I'm a Bitcoin miner.
That's true. $500. And we will, yeah, $500 per S9. And you can find me at Harry_Sudock on Twitter. I welcome all DMs. They're open. And that's it. Thank you, guys.
Thank you, Harry. And let's go to Karim.
I'm going to go with $400. And I'm at Karim Helmy on Twitter.
All right, awesome. This is a wide spectrum of guesses. Well, Amanda, take us home.
Thanks, guys. Thank you so much, Bran, for inviting me to co-host with you. This was a lot of fun. And thank you all so much for joining on this lovely Thursday evening. We will all talk soon, I'm sure, and happy hashing to all of you.